Two of America's banking giants are going head-to-head in court over a failed $481 million commercial property loan. Wells Fargo is suing J.P. Morgan Chase, the largest bank in the U.S., claiming it knowingly approved a bad loan despite being aware of fraudulent financial statements, according to Reuters. Back in 2019, J.P. Morgan issued a loan to real estate firm Chetrit Group to finance the purchase of 43 apartment buildings spanning 10 states. But Wells Fargo, acting as trustee for investors, alleges that both J.P. Morgan and Chetrit knew the seller had artificially inflated the building's income by 25% before closing the $522 million deal. Why does that matter? A property's historical net income is a key factor in determining its value. If the numbers were faked, investors were misled about the true profitability of the buildings. According to Wells Fargo, J.P. Morgan approved the deal anyway, raking in millions in fees while expecting investors to absorb the loss down the road. And that's exactly what happened. By 2022, the loan went bad, leaving investors with tens of millions in losses. Now, Wells Fargo is demanding that J.P. Morgan either pay damages or repurchase the loan to compensate investors. So far, neither J.P. Morgan nor Chetrit has commented on the lawsuit. But with this much money at stake, the legal battle is just getting started. Crypto analyst Ali Martinez is reporting that deep-pocketed investors, or whales, are making a big move in Ethereum, ETH, despite the market correction. In just 5 days, they bought over $815.5 million worth of ETH, adding more than 420,000 ETH to their holdings. Martinez also highlights Ethereum's price action, with $1,870 as its strongest support and $2,050 as its toughest resistance. As of now, ETH is trading around $1,941. On the Bitcoin, BTC, front, Martinez believes BTC is on the verge of a tactical rally, breaking out of an ascending triangle pattern. If $84,000 support holds, he predicts a price target of $90,000. At the time of writing, BTC is trading at $84,288. As for Cardano, ADA, Martinez forecasts a 15% rally if ADA breaks through the 75 cents resistance, signaling a potential breakout from its triangle pattern. With whales loading up on ETH and key technical levels in play for BTC and ADA, the next couple of weeks could be crucial for the crypto market. Hedge fund legend John Paulson is making bold moves in two of the market's hottest sectors, gold and tech. His firm, Paulson & Company, just scooped up $33.72 million worth of International Tower Hill Mines, THM, in Q1 2025, adding over 6 million shares. SEC filings show Paulson now controls 70 million shares, giving his firm a 37% stake in the gold mining company. At the same time, he's shifting into big tech, grabbing $23.73 million worth of Alphabet, Google, stock, 126,000 shares in total. This signals strong confidence in Google's future despite market volatility. Paulson's gold bet comes as gold prices surge past $3,000 an ounce, fueled by economic uncertainty and trade tensions. THM stock has already climbed 40% in the past month, reinforcing his longtime bullish stance on miners. Famous for his 2007 subprime short, Paulson continues to balance safe havens with high-growth plays, proving once again that he knows how to find value in turbulent markets. David Sachs made a major move before stepping into his new gig as the Trump administration's AI and crypto czar, offloading over $200 million in crypto-related investments. According to a White House memo from presidential counsel David Warrington, Sachs and his firm, Craft Ventures, liquidated holdings in Bitcoin, BTC, Ethereum, ETH, and Solana, SOL, before Trump's second term began on January 20. But that wasn't all. Sachs also sold his stakes in the Bitwise 10 Crypto Index Fund, BITW, Coinbase, Coin, Robinhood, Hood, and several private crypto firms. On top of that, he exited limited partner positions in crypto-focused investment funds like Multicoin Capital and Blockchain Capital. The memo states that Sachs even started selling his interests in about 90 venture capital funds as a precaution, since those firms could invest in digital assets. In total, he and Craft Ventures dumped over $200 million, with at least $85 million coming from his personal portfolio. Warrington praised the move, emphasizing that Sachs had taken significant steps to avoid conflicts of interest. However, despite these efforts, Craft Ventures still holds stakes in several crypto-related firms, including BitGo, blockchain gaming developer Dapper Labs, and Chia Network, a proof-of-space and proof-of-time blockchain project. For now, Sachs appears to be distancing himself from direct crypto holdings, but his firm isn't completely out of the game. Despite a shaky economic outlook, financial giant Cantor Fitzgerald sees a stock market bounce coming in the next couple of weeks. Speaking on CNBC, macro strategist Eric Johnston said that while the broader equity environment looks fairly poor, a short-term rally of 3 to 5% is likely. Why? Johnston points to several technical indicators. The Relative Strength Index, RSI, dropped below 32, a level that historically signals an oversold market primed for a rebound. The VIX curve, a measure of market volatility, has inverted, indicating high investor fear. On top of that, hedge funds have reduced their exposure, and systematic funds have already made their big sell-offs. Johnston also expects the Federal Reserve to take a dovish stance next week, which could fuel a market boost heading into month-end. This potential rally comes after a brutal stretch for U.S. stocks, which lost a staggering $5 trillion in value over the last 3 weeks. Will this bounce hold, or is it just a temporary breather? Time will tell.